Okay, so you are welcome to today's class. And today we're going to introduce ourselves to the technical analysis, which is one of the ways of analyzing the market. Okay. So we're going to complete the whole of this class on Thursday. Okay, so we still have some things to cover. Okay, but today we'll look at technical analysis. So let me quickly take you to what I want to use for today's class. So I'm going to take you to the MT4 platform. And okay, so this is what I want to use. And so there are three major types of market analysis. All right. We have three major types of market analysis. And so the first one is what we call fundamental analysis. This one has to do with economic news, and market events. I'm going to talk more about it. Number two, we have technical analysis. This one has to do with chart patterns. Okay, let me say historical chart patterns. Okay, that's just what we are trying to do there. All right. And the third one is sentiments analysis. That's the market participants' perception about the market. All right. So I'm just going to put them in short like that, although I could actually give a longer definition. Okay, so looking at fundamental analysis, that one has to do with economic news and market events. Okay, so whether you trade currencies, whether you trade cryptocurrencies and all that, what is moving the market is as a result of demand and supply, right? Do you guys agree with me? When demand is more than the supply, what happens to price? Can somebody drop the answer for me? When the demand is more than the supply, what happens to price? What do you guys think happens to price when the demand is more than supply? Well, I'm yet to get any answer. And when the supply is more than the demand, what happened to price? Okay, China said the price will increase. Yes. When demand is more, that means there are more willing buyers, the price will go up. And when the demand is more than the supply, okay, the market is going to go down. It's just like that. But there are things that are making market participants to decide whether they want to buy or sell. Okay, those market events, maybe some central bank interventions or some central bank policies, or economic news, economic events, economic releases like the GDP of a country, like the interest rates, okay, of a country, or the unemployment rate of a country. So what do you guys think will happen if to the economy of a country, if the unemployment rate starts rising and rising? What do you guys think will happen to the economy of that country? Now, that's another question for you guys. If unemployment rate is just shooting up and shooting up and shooting up, what do you guys think will happen to the economy of that country? Is it going to be better or is it going to be worse? Okay, let's put it that way. Do you think the economy is going to do better or the economy is going to do worse? What do you think will happen? Okay, I've given you two objectives there. Okay, no, let's not use GDP and inflation and all that. Those are on as different terms. We're looking at unemployment. What happens to the economy when the unemployment rate is increasing? That means people are losing their jobs or businesses are finding how to create more jobs and the universities are graduating more people into the labor market. And so the unemployment rate is now increasing, putting pressure on what? On existing jobs. What do happen? What do you think will happen to the economy? Will it increase? Will it do better or do worse? Balance says the economy will derail, the economy will crumble. Okay, let's not use all those ash words like crumble and all that. It's just economy that time is going to falter, it's going to reduce, it's going to do worse. Yeah. Thank you, Chimezili. That I like that the economy will do worse. Yeah, the economy will do worse. Now, if the economy is worse, what do you think will happen to the currency of that country within that particular time? Just our own layman's perception. What do you think will happen to the currency? You know, we said that the currency of a country is a single tracker of the economy of that country. So if the unemployment rate is rising and the economy is doing worse, what do you think will happen to the currency of that country in question? Will the currency increase in value or will it decrease in value? What do you think will happen? Now, I'm putting the question across to us again. So I need just one answer from one person. What do you think will happen to the currency of that country? I've not gotten any answers yet. Or is it a difficult question? Okay, Shimezili says the currency is going to lose value. Do we agree with him? I'm not getting a quick response from us. I'm not getting quick responses from us. Okay, so the currency of that country is going to lose value, right? Yeah, that's not the only thing that can make the currency of a country to lose value anyways, but that could actually make the currency of a country to lose value. Unemployment rate is going higher, economy is doing worse, then the currency will most likely lose value. Now, that is what we call fundamental analysis, looking at all those economic stuffs, looking at the actions of the central banks of that country, the actions of the government of that country, okay, to control maybe inflation, to control unemployment, to all those different stuff. So the analysis of that, all those economic releases and all that is what we call fundamental analysis. And we're going to talk about all of this in details in the intermediate and master class. So we have created two other classes for us, which is the intermediate and the master class. So in the master class, in the intermediate class, we're going to dwell more on these fundamentals, how you can build your own fundamental model, okay, to trade. All right. And then in the master class, we're going to even go much more in detail. We're going to show you guys around some really very fascinating stuffs that'll make you to be very confident when it comes to trading. Okay, but that's not what we want to look at today, because that's like another 1 week of a class of lessons. Okay, so the second way of analyzing the market is what we call technical analysis. That one has to do with reading and studying historical chart patterns. That means the past price activities that are represented on the charts, okay, like this. Okay, like this chart. Okay, I've shown us different chart, like this chart now. So this chart represents the past price activities. Okay, this is the current 1 hour. I'm on the 1 hour time frame. So this is the current 1 hour, okay, on the charts. And so these ones are the past hours. Okay, in fact, so far today, today is 24th. I'm trying to look at when the 24th started. Okay, 24th started with this bearish candle. So that means this is what the market has done so far today. It fell during the Asian market and then pushed up and then came down again and then pushed up and then went down and just around it. That's GBP US, Euro US dollar. So you studying all this past price activity, all right, is what we call technical. All right, now we have a lot of people who have done work, different types of work, different types of research, okay, that traders can now learn from and give them some kind of an outlook about what the market is trying to do, even build strategies around those teachings, those theories, okay, so that we can use them to trade. And I'm going to show you, I mean, a ton of them. All right. So sentiment analysis is that one has to do with the market's perception. All right, the participants' perception about the risk in the market. Okay, so this is not something we're also going to look at this level. We're going to also look at when we get to the master's level, or when we look at it, and we look at it in the intermediate class. So make sure at the end of all this, make sure you find yourself in the master's class, which is the advanced class, or even maybe in the intermediate class, okay, because there are a whole lot of fascinating things there for you. Okay, so but what we want to discuss now today is the introduction to technical analysis, which is how do we start reading charts? Okay, that's what we want to do today. Introduction to technical analysis. And now when we introduce ourselves to technical analysis, anytime we start with technical analysis like this, there are the first thing we always talk about is the trend of the market or of the instrument we are looking at. So when we talk about trend, we are talking about the side of the market that is in control. Is it the buying side of the market that is in control, or the selling side of the market that is in control? Like we said, we established at the beginning that when the buyers, okay, or when the buying volume, okay, the volume of buys, okay, is more than the volume of sales, price is going to go up. And when price is going up like this, although it's going to be making some minor move downwards, but overall we can say that it's going up because this is where it started and this is where it is. Although we're having some minor move downwards, we can actually say that the price is trending up. All right. Of course, that's very clear. The price is what? Trending up. And that is what we call an uptrend. That's price is making up trend. All right. I mean, price is making uptrend. It's moving up, although it's making some minor move down. But overall, we can see the direction, that the direction is upwards. And so that is what we call an uptrend. Now, on the other hand, when the price is also going down like this, although it's making some minor move up, we can also say that I'm getting some distraction video. Let me move them. Okay, we can also say that yes, price is making downtrend a downtrend. So anytime you look at the market, it's either the market is trending or is not trending. So it's either the market is trending or not. You get that? So when you look at any chart, it's either the first thing you're going to notice is that, or the first question you're going to ask yourself is that, is the market trending or not? If the market is trending, what direction? So it's either it's trending upwards, which is an uptrend, or a bullish trend, or it's trending downwards, which is a downtrend, or a bearish trend. If it's not trending, then it's moving sideways. That's like a no trend move. That means it's moving sideways. Is not really moving in a regular direction. So let me give us an example. So when the market is moving sideways, what is we could get something like this. Okay, starting here, goes up, goes down, goes up, goes down, goes up, goes down, and it's just moving within a range. So we can say that price is moving within a range like this. So it's not really, we can't really be certain. We can't really say for sure. There's no clarity, okay, about the direction of the price. So when that happens, we say the price is moving sideways or is in a range, or it's in a range. So when you look at the price, when you look at your chart, you are going to get a trend or a sideways overall direction of the market. So that's the first thing we always want to note. If I want to show you examples, look at the Euro USD, we can actually say that Euro USD has been trending up. Right? On the 1 hour time frame, it has been trending up, especially from here. From here. Trending up, down, up, down, up, down, up, down, and up now. So the trend has been upwards, right? So if you also look at the GBP US dollar as well, GBP US dollar is also trending up also, right? It's been trending up also from here, up, down, up, down, up, down, up, down, all that. So it's been an uptrend. Let's look at an example of a downtrend. Let's look at US dollar Japanese yen, or maybe I think US dollar CHF has been on the downward trend since, this week majorly. USD CHF has been on a downward trend. So that's USD CHF. As you can see, it's been on a downward trend as well. It's very, very clear. This is a downward trend. Now, one instrument that's not really been making a very certain move, is looking a bit sideways, is I think New Zealand CHF. If you look at it from the higher time frame, or maybe not, it's not. We can't really call this a downward trend. We can't really call this. It's still a downward trend, anyways. We can't really call this a sideways because when you look at price from here, it's moving downwards. I will have to look for another example. Okay, so let's look at Bitcoin. Bitcoin is a good example of a sideways trend or a range move for some time now. Where is it? Chart window, sorry. Okay, so if I kind of so if you look at it, let's say we look at the 4-hour time frame, and we'll look at what has been happening between, because when you're also looking at a trend, you need to have a reference between what time and what time. You have to make a reference. So it's really very important that we make a reference. So from 12th May, from 12th May, Bitcoin price has been going sideways. I think you guys will agree with me. Went up to close to 32,000, okay, above 31,000, came down, up, down, up, down. So it's just within this range, like a triangle. So we're going to talk about different chart patterns in the intermediate class, all right, where I'm going to teach you how you can trade this pattern. This is a triangle pattern. I'm going to teach you how you can trade these patterns, how to find entries and all that. So please don't miss those classes. So it's been going sideways, all right. So you as a trader, when you want to apply technical analysis, the first thing you always ask yourself is, what's the market doing? You make a reference and ask yourself, what's the market doing? Okay, because when you look at Bitcoin, if you move it back, you will see that Bitcoin actually, generally overall, when you look at it, it's actually been in a downward trend since when? Since March. Down, up, down, up, down, up, down. But when you look at what it's been doing since May 12th, it's been going sideways. So that's why I say you have to make reference, okay, to a time, a particular time where you are looking at the market from. Even though I said this is a downward trend, if I go to a higher time frame, I can still say that Bitcoin is in an uptrend. From the long-term perspective, is in an uptrend. As you can see, up, down, up, down, up, just another down move. So it's still in a general uptrend when you look at it from the weekly and the big time frames. When you look at it from the 1 hour time frame, it's been going sideways, all right? But when you look at it from the 4 hour time frame, see this is a 1 hour time frame. When you look at it from the 4 hour or from the daily time frame, it's been on a downward trend. Okay, so when you are doing your trend analysis, it's important to know what time frame you are looking at. So somebody that's looking at it from the 5-minute time frame is not going to see a sideways move. It's going to see a real trendy move, right? Look at the 5 minutes. It's been trending. Here we have a downward trend, right? That's between 23rd of May, early 23rd of May, and 23rd. Okay, 23rd of May. Generally, it was actually bearish. Okay, while today is been bullish uptrend. Okay, so it depends on what time frame you are looking at. So if somebody says, I mean, you can ask different traders what's the trend saying, and they might tell you different thing. The reason is that they are looking at the price from a different time frame. So it's very important that you understand these different trend formations or trend patterns, so that you know how you are going to navigate yourself around it. Okay. So now let's try to give the trend some definition. Okay, let's try to give our trend some definition. So how do you identify a trend? Of course, the best way to identify the trend is by looking at it with your naked eye. Trends are very easy to identify. Just look at it, you know this thing is trending, right? And if it's moving sideways, you know it's moving sideways. But we just want to give it some definition. All right, so I'm going to give you some stuff now. So the first thing I want to give us is this. One. Okay, let me not use this. When the price is moving downwards, when the price is making a downward trend, okay, let's start with in an uptrend. The price is making a series of what we call higher highs and higher lows. Okay, that's the first thing. The second thing is that we're going to note is that the highs in an uptrend are weak, while the lows are strong. Okay. So we can also say in an uptrend, there are what we call minor pullbacks to form new lows. That's the third thing that we're going to talk about. And then number 4, after a trend comes either a correction or reversal. So when we look at all this, we'll now talk about how do we recognize the start of a correction. Okay, so I hope we like the color that I'm using. Let me see if I can get a brighter color for this. Let's see. We're ready to be good. Okay. Let me use white. Let me try white. Okay, I think this is better. So in an uptrend, the price is making a series of higher highs and higher lows. You can take a screenshot of this or write it down. The highs in an uptrend are weak, while the lows are strong. In an uptrend, there are minor pullbacks to form new lows. After a trend comes either a correction or a reversal. So we're going to talk about each of these points one after the other. All right. Somebody says, balance says, can you explain number well? I don't really understand that. Okay, so let's go now. Now, when the price, like if you look at the way things are moving, let's say price is going up like this. Now, these are high levels. These are very, very simple things. So this is a high level. A high level is a point where price makes a pullback. This is a pullback. Pullback, okay, is a move against the direction, no matter how small it is. No matter how small it is, if you start seeing a bearish candle, that's a pullback. when you have bearish candles, okay, giving you a counter trend move. Price is moving up, but we have minor counter trend move. So when that happens, that is a high. When the counter trend ends, price is going to continue to go up to continue the trend. So we have a low. So highs and lows are just like the point where price is turning, the turning points, whether from up to down or down to up. So from up to down is a high. From down to up is a low. This is another high. This is another low. And price is coming here to make another high. So that's the meaning of this, that price is, when you look at what price is now doing in this case, you see that this is a high. Okay, let's label a high, a low, a low. You can even call this one a low. What you're going to see here is that when the price is making an uptrend, the highs are getting higher, right? Higher, higher. And the lows are getting higher as well. So that's what we mean, that in an uptrend, the price is making a series of higher highs and higher lows. Simple. Okay. Now, the second point is this: when the price is making these highs and these lows, one thing you're going to notice is this: the highs are quite weak. What we mean by weak is that they are easily broken by the price. The reason is that the trend is upwards. So the highs are going to be broken to give us new highs. So we have a high created here. We have a high created here. And this is a low. But we can't actually call this a high yet until we see a move against the trend. So we have that move against the trend. So this high has now been established. Okay. Now we are not, this is still the low that we have. This is not yet a low until price breaks above the most recent high. Now, in an uptrend, the lows are much more important than the highs. Okay, the lows are more important than the highs because it's an uptrend and price is expected to be breaking the highs while the lows stay intact. Okay, so when price turn around like this, we have a high and then it's making a low. But so far, we've not yet gotten a low until we see a break above here. So if the next move now happens, and then this next move now, we are now have a break above here. So we now establish this low. So we now have a higher low. Now, this high has been broken. It's a weak high. It's been broken. So we are now getting a fresh high here. This is still the low. This is still the most recent high. This one is still making an high, but until we've not really confirmed where the high is going to be until price makes a pullback. So let's see the pullback. The pullback happens, and so we have a new high. So this is a I1, I2, low 1, low 2. But because it's an uptrend, it's expected that this most recent high is broken. Okay, but we can't say this is the low yet because price is still falling. This is still the most recent low. So for us to recognize the next low, we have to see a break above here. So one thing you're going to notice is that when the price is going higher in an uptrend, we are much strict with the low than the highs. Okay, because once price turn around here, we establish the low. We establish the high rather. So we don't wait for the previous high to be broken again or the previous low to be broken. We don't wait for the previous low to be broken before we establish the high. Okay, but we expect the most recent high to be broken before we can establish a new low. Okay, that happens because this is an uptrend and the highs are usually, even not even usually, they are expected to be weaker than the low. So that's how we can track the movement of the trend. In as much the lows are still being kept intact. Okay, whatever move you see against the trend are just pullbacks. Okay, this is a pullback, this is a pullback. So what happened afterwards? Price broke above this most recent high, and to give us another perspective, why we now confirm a new low. So this is a low, 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 high, high. And so that's how we're just going to continue, to monitor this, to monitor the trend. Okay, so these counter moves are called pullbacks. They are pullbacks if they don't break the most recent low, if they don't violate this higher high and higher low formation for an uptrend. Because just imagine if the price now makes a new low and breaks below here. Okay, what happens there is that because eventually we're still going to see another move like this, what happens there is that the most recent law has been broken. That's a violation. That's like a change of market structure. Okay, so a change of market structure. If that happens, this is no longer a pullback. So we can now call this a correction. So we can call this, that means a correction has started, which is a much bigger weakness, okay, compared to pullbacks. Pullbacks are well formed within this higher high, higher low structure, which means the most previous lows are being kept intact, unbroken, while the highs are broken easily. Okay, but the moment we see the most recent low broken, a correction has started. Okay, because at the end of the day, the price is not going to continue to go up forever. At some point, it's going to make a correction, okay, or a reversal. Okay, so how do we now know what's the difference between a correction and a reversal? It's all depend on where the trend is starting from. Now, this particular trend, uptrend, is starting from here. So any move that happens above here, any counter trend move, that is a downward move that happens above here, it's either a correction or a reversal. Sorry, it's either a correction or a pullback. So pullback, we've talked about pullback. Corrections, we talk about correction. So what now happens when the price breaks below here? That is a reversal. So this is the starting point of the trend. So once the price now breaks, let's say continues to go down and breaks below here, then we have a reversal. So that means the bullish trend has now turned to a bearish trend. And we can start counting lower lows and lower highs for a downtrend. So that's how you can analyze market trends. Okay, that's how you can analyze market trends. I hope we all get it. Okay, so with this now, we've talked about pullbacks, correction, and reversal. So let's now look at the other. Let's look at the bearish counterpart. So let's say the price is making a downward move. So let me find a way to change this. So in a downtrend, the price is making a series of lower lows. Instead of high and high, to be lower low, and lower highs and lower lows. Okay, the lows, the highs, okay, let me say the lows in an uptrend are weak, while the highs are strong. In an uptrend, in a downtrend, there are minor pullbacks to form new highs or new weak highs. The highs are weak in this case. Okay, sorry. The highs are strong rather. After a trend comes either a correction or a reversal. Okay, so let's also try to do illustration of this. So you have price making a series of lower lows and lower highs. So price is making a series of lower lows Okay, so as you can see, this is a low. Okay, this is a low, a high, a low, a high, a low, a high, and even a low here. Why this is a high? And what you're going to notice here is that the lows are getting lower, while the highs are also getting lower. So that is a typical downtrend. Okay, and so even at the beginning, just okay, let's look at the second. The second one says the low in an uptrend are weak. Why? Because the lows are expected to be broken easily, while the highs are expected to stay intact, unbroken. So to sustain the bearish trend. Okay. So if okay, so price broke below the most recent low here, right? And so we have a new high. And so what happens afterwards? Let me pick my drawing. Afterwards, price move up. So for us to have a new low, but we don't have a new high yet until price breaks below here. So once price breaks below here, we have a new high. And so once we have another pullback, a new low has been established. Before we get the new high, this is still the most recent high. We'll have to see price break below here. Okay, so when it breaks below there, we now have high. So you can see the highs are untouched, unbroken, while the lows are just getting easily broken. So that now gives us series of lower lows and lower highs. Now that is a downtrend. Okay, this minor move against the trend are called pullbacks. Okay, in as much, okay, this pullback here, in as much it doesn't break above here, it's a pullback. This pullback here, in as much it doesn't break above here, it's a pullback. All right, and then the next pullback, if it doesn't break above here, it's just a pullback, and the trend might just continue to give us a new high. All right, but when price now makes, like, this is the recent high, most recent high, when the price now makes that move to break the most recent high, then we have a change of market structure, which means that an heavy weakness is starting. Okay, change of market structure, which now results in a correction. So we can say that price has started a correction here. When price start a correction, at least for a correction, okay, so for a correction, you will now also be looking at a series of higher highs and higher lows. Okay, higher highs and higher lows. And so until we are able to see a reversal here, until price breaks above here, whatever that happens, whatever that happens within here, no matter how deep the price make this correction, it's still a correction until it breaks above the starting point of the trend. That is when we can say that the trend has reversed. All right. Okay. So that's it, guys. Now let's now try to do some exercise before we now practice this on the chart. Okay. So let's see. Price starting here. So we get an uptrend. Okay, so an uptrend is starting. The highs are getting broken. Okay. And so what happens, this is as price is making a move up, you will always be noting, let's be noting the most recent low, because it is around there that there's going to be a kind of structural shift. Okay, so we might see a kind of structural shift, okay, in the price structure, which is also known as a correction. So let's say this move happens here. Now, just for what we have here, this is a pullback, which can still result into another break here to continue the trend. But instead of that, price makes another move here, but it's not a high. okay, because we can't actually, okay, it's still a minor high, but we can't call this one a low yet until price breaks above here. But instead of price to break above here, then it breaks below here. So within here now, we're still going to consider this a pullback. This is still a pullback, just like we have for this, and just like we have for this. All of them are pullbacks, but this one is just like maybe it's getting more complex as a pullback. Okay, but eventually, if price now break below this most recent high, then what we have there is the change of market structure. Okay, let me remove this one. So what we have there now is a change of market structure. So we can say that a correction has started. So what is now going to happen? Two things will most likely happen in this case when price makes a correction. The first thing that can happen is that the correction will end and then the trend will continue. So that can now present us a trading opportunity. So that means we identify a trend and then wait for a correction, and then we look for another a buying opportunity. That's a typical scenario for trend traders. Okay, so once price confirm a correction by the break of this structure, of the upward structure, so that means that you will now start noting how this is moving, because normally in this correction, we're also going to be expecting lower lows and lower highs, although it's still a correction until price breaks below this starting point here of the bullish trend. Okay, so what happens? How do we now start anticipating the resumption of the trend if it happens? Let's say price makes another move here and then cross. Okay, before I say that, before we can say that this bearish correction has ended, we have to see a break above the most recent high. Don't forget that in a bearish move, okay, in a bearish trend, all right, the highs are the strong ones, while the lows are the weak ones. So for the fact that price has violated this and we have confirmed the correction, before we can see that the trend is starting again, we'll have to see a break above here. So if there is a break above here, then we can confirm that, yeah, the trend is starting again. Okay, let's say this is now what we have. Price moves up, didn't break above it, and then comes down again. So I'm going to mark this one as the recent high, okay, for the bearish correction again. So that's how you track the market trend. When the market is, this only applies to market, a trendy market. Okay, so let's say eventually, we now eventually see a break above here. So at that point, we can then confirm, okay, maybe temporarily or permanently, that this whole correction has ended. And then we'll now start monitoring higher highs and higher lows again in this manner. Higher highs and higher lows again. So it is at the break of this structure here, okay, break of the bearish correction structure, to confirm the continuation of the bullish. And that's when we start looking for bullish opportunity. Okay, that's a typical trend analysis. So we can now use other tools here and there, here and there, here and there, to find entries so that we can continue this bullish trend. Yeah, that's one thing that can happen. Another thing that can happen is that price just continues to go downwards until it reverses, until there's a reversal. So that's how you can easily identify at the end of a correction and a correction that is getting into a reversal. Okay, I hope this is something we can all understand. Likewise, in a bullish trend, in a bearish trend rather, price is going downwards, moving lower lows and lower highs. Okay, which means that the lows are weak while the highs are strong. And so before a correction starts, we need to see a break above the most recent high. But instead of price to do that, it makes another pullback here and then it dumps, break below here to continue the bearish trend. Okay, continues to do that, continue the bearish trend, break here, break of to continue the downward, break of the most recent low, okay, to continue the trend, like the break here, like the break here, like the break here. So these ones are just confirmation that the trend is continuing. Okay. So which now means that at this juncture now, this is the most recent high. So if the price now eventually, let's say, goes high like this, down and breaks above here, what happens? We can say that a correction has started. So this is no longer a pullback. All right. This is no longer a pullback. So a correction has started. So we're now going to monitor higher highs and higher lows. We want to continue to see higher highs and higher lows now to confirm that the correction has started. So if you now see another move here down, okay, before you move here, it shows that the correction is still ongoing. So two things now. We're going to anticipate a reversal of the trend. We're going to anticipate the end of the correction so that the trend can continue. So one of that is going to happen. Okay. If the price goes this way and go up, it's still a correction. So what we're going to do here is just to adjust this one here. Okay. Adjust it to the most recent low here. If it continues to do, in as much doesn't break below here, above here, at some point, the correction is going to end and price is going to continue downwards. So let's say after all that, we are able to see maybe a move like this, an up move, and then a down move. So that's not the confirmation that this correction here, has ended. This one, okay, between here and here, this one has ended, and then the bearish trend is continuing. It is at that point we'll start looking for bearish opportunity. Okay, for those who know how to use Fibonacci and all that, you can just do like 50% retracement and sell, stop loss here. So these are just looking at the naked chart, just studying how the price is moving. Okay, how the trend is developing. Like I say, let me say this again, this is only useful when the market is in a clear trend. All right, if the market is not, no, it's not useful. And let me also say this again. Let me add this, that it can actually get more complicated than this. Okay, it's not always this straightforward. Okay, an example of such is, let's say price is going up, higher highs, and then breaks below here to give us a change of structure. Okay, and so we now have this, just continue to go downwards to still confirm the end of the trend. Let's say we now have this here, and we now say, okay, if the price breaks above here, it means that the correction has started. So once the correction has ended and the trend is going to continue, okay, that's the implication of this. But while we do that, we also need to monitor the development of this one, because if, let's say, we wait for a bit of retracement and then we look for opportunity to buy, we must make sure that price does not still break below here. Okay, so price is going up now. The lows are very important. Okay, the lows are very important. So if price now breaks below this low, let's say it goes up like this and it breaks below this low, it's actually another way of saying that this correction here is reestablishing itself. Okay, so it can come in different scenarios. It can actually get complicated. Okay, but the most important thing is to add some other tools for confirmation. Okay, and it's also very important to know that we are not always going to be right, okay, about this, because it's a very, very dynamic market. So you should be ready that there are some times you are going to get it wrong. Okay, so let's now look at the chart. For example, let's look at what is currently happening on the Euro US dollar. Now look at the Euro US dollar, the way it's making this trend here. You can see this high here, this low here. Price broke above the most recent high and then it moved upwards. This is still the low. Then it ground like this. This particular move here, this one didn't break above here. So we can't say this is the new low. This is still the new low. Until price broke below this new low, The bullish trend is still established, no correction yet. This is just a pullback. Even when price came this way, it's still part of a pullback until price broke below here. Now, okay, until price breaks above here. Okay, that's why we can confirm this as a low. And until price breaks below here, that's why we can confirm this as a correction. Eventually, price broke below here, and then we confirm a new low here. All right. And price moved up, came down again, another correction. This new low is standing untouched. Price broke above here again, you have a new low here. Price moved up like this. Then we have another correction here. Price broke upwards again. This is the new low. So that's how you kind of follow the price. So until we get a break below here now, we can say this is a correction has started. All right. So let's see if we can get an example when a correction started. An example of that is, let's look at what is happening from here. So since 31st March, let's just say April, almost like throughout April, your US dollar was just falling. So we're getting this, I mean, price moved like this. Then we got a correction that broke below here. The price made up, down, up. Didn't okay. When it comes to break, now let me explain the break now. The kind of break I'm talking about is you must get a candle that closes above here. If the candle does not close above here, you might not really consider it as a break. Like what we have here, we don't really see a proper break of this one. Let's see if we can enlarge this. So that wasn't really this wasn't really a proper break. Yes, this candle a bit close above here a bit, but it wasn't really a proper breakthrough in price, right? I don't know if you guys will agree with me. We didn't really see a proper breakthrough here, because when this candle a bit, let me put this one here. When this candle a bit closed above here, we're supposed to see a further move up, like some kind of more confirmation candle to tell us that the correction has started. Okay, but even if the correction has started, the fact that the correction didn't get sustained, and let me give us what we have. Let's say price was moving down like this, and we got this most recent high here, and price makes another just minor break above here. So if the correction is going to start, we want to see this one developing into higher highs and higher lows. But if the correction, the way we're going to know that the correction has ended, if we see a break below here. So, well, according to definition, we can say that this is a correction because this candle a little bit closed above this high. It's just that we didn't really see any follow through candles, okay, to establish that the correction is going to go higher. But instead, price collapsed. So let's continue. Okay, I hope this is making sense to you. If it's making sense to you, please drop a message. Let me know if this is making sense to you. So, and then up, down, up, down, up, down, and price make this correction here. Okay, correction because it closed above here. Now, this is a correction. Just like we said, when we have a trend and a correction, how do we know the continuation of the trend? It's price should break below here. Once price breaks below here, we can see that this is the continuation of the trend. All right, now this is a correction. This one is a pullback. It's a pullback because the most recent highs are not broken until here. And these are just broken marginally, very slightly. And so we have this correction here. Okay, but the correction couldn't really get a follow through. Instead, it ended here because we were able to see a break below this low here. Now, once we get as price broke below there, that is, you start looking for selling opportunities. So because that's an indication that the trend is reestablishing itself. And that's exactly what happened, right? So let's go on further. And so we have this this correction. ended here, and then price reestablished itself, making series of, these ones are just tiny stuffs. Let's say this is the another move here, another high, right? Another low, another high. Then price continues to just break the most recent low, and then the trend just continues, right? Up to this stage, the trend still continues. Now we're having this correction now. So we want to see price break above here. Okay, before we can confirm that that's a correction. So you can see that price broke above. So when it came here, price came here like this and broke above here. That's a confirmation that the trend as correction has started. But instead of the price to break below here to continue the trend, what happened? It made a low, a minor move here. This is the low, this is a low, this is a low, and it broke above here. So really broke above here. That's a confirmation that the trend, the correction is continuing. So if somebody asks you what the price is doing now on Euro US dollar, it's a correction, right? It's in a bullish correction. Okay. So, and you can continue to monitor the way the bullish correction develops until it ends. So currently, this is the most recent low within the correction here. Or maybe, okay, I think here, yeah. So you're able to see a break below here. Okay, it's an indication that probably the correction has ended. All right. And then we'll start looking for sell opportunities. Okay. But instead, the price comes like this. Instead of it to break below here, it breaks above here again. What happens? That's a continuation, that's an indication that the correction, the bullish correction continues. Okay. So do we understand that? Okay. I hope that all of us understand that. So if you don't understand very well, that means you have to watch the video again. Okay, because this stuff, you actually really have to practice it and see it for yourself. Okay. Okay, so the next concept we want to talk about now is the trend line. Okay, so how do we use the trend line tool? Now, trend line is useful for the trend. The trend line, we use it for the trend. So this is the trend line. We talked about that during the session we had yesterday. Okay, but I said that I was going to explain how we use it better today, because it's trend line, trend line. So it's a line that we draw to just monitor the trend. So another way of you identifying a correction is also by plotting the trend line. So if the price is going up, if we are in an uptrend, so that means you need to draw an uptrend line to monitor the uptrend. And also when the price is falling, like this, you also need to plot a falling trend line to monitor the trend. So how do you plot this trend line? Price is going up here, down here rather, and it's going up here. When the price is going down, we say that the lows are weak, while the highs are strong. When the price is rising, the highs are weak, while the lows are strong. So you put your trend line where we have the strength of the trend, which is at the bottom for an uptrend. Okay, so you look for 2 or 3 lows that you can connect, such that the price has not yet broken the line when you project it forward. So this is what I'm saying. So let's say we have this trend here, uptrend, these 2 lows. You're going to, okay, we have 3 lows actually, 1, 2, 3. So your attention is going to be on the lows. So you're going to pick your trend line and click one of the lows and drag it to the second low and then project it forward. Drag it forward. Now, this is a trend line that kind of monitors the trend. Okay. So the thought about this is that if the price breaks below this trend line, okay, it can be an indication that a correction has started. All right, it's an indication that the correction has started. Okay, but if price comes to the trend line or before it gets down, then shoots up, it means that the trend is continuing. All right. So that's just what it means. Okay, so the trend line is just to help us to give us some kind of support with all this explanation about the trend that I've just given you guys for like is it for like 30 minutes now? So is it 1 hour now? I think it's about an hour that I've been talking about it. Okay, so that's the upward trend to monitor the upward trend. Okay, and for the downward trend, we also have the downward trend line like this. Okay, sorry, this is a trend line tool, so I can connect this, this and this, and project it forward. In this case, you are having like 3, 1, 2, 3 connected together. Okay, another person might say, I want to use this and this. That's the trend line to connecting these two lows. Another person might say, I want to use these two outer. This one is inside. Okay, when I say this one is inside, I want to use these two outer level, this and this, these two outer lows, and connect them. Okay, so you can see that all of them are almost like the closer they are to the price, the closer the low, the smaller the lows, or the closer your trend line is going to be to the price. Okay, so I advise that we don't use trend lines that are very, very close to the price to make sure that your trend line is significantly away from the price so that you'll be able to measure the start of the correction properly. Okay, so let's use that now on the chart. So we have this upward trend, and this is a low here, a low, a low, a low. So that a different line that we can plot here. I can put a line like this from here to here. Cool. I can put another one between this and this. I can also put another one between this and this. Now this one is very close. I won't want to use this one as an indication for correction. I will have to use this or this, okay, because this is where we have even have the most recent low here. So price my break below here is not really an indication that the correction has started because this trend line is very close. So one really have to apply some some common sense there. Okay, so it can break here, but this is the most recent low. That's why when it comes to correction and all, I like using the lows and the highs instead of the trend line. Okay, so what we can use the trend line for is to provide support and resistance, which I'm still going to talk about soon. Price might just come here and then bounce up again. All right, so that's just how you plot your trend line. Okay, and it's useful when the market is trending. Okay, when the market is trending. So the next concept we want to look at is the concept of support and resistance. All right, is the concept of support and resistance. So what is support and what is resistance? Support is a demand level or a demand zone where buyers are taking control after a massive, or let's over after an overwhelming selling pressure. While resistance is a supply zone, a level where sellers are taking control after an overwhelming buying pressure. Okay, so let me now explain that. So let's look at support first. You say it's a demand level where the buyers are taking control after an overwhelming selling pressure. So the sellers are in control. An overwhelming selling pressure is happening here. And price now gets a point where the buyers are now taking control. If the buyers are now taking control here, what is going to happen? The buyers are reclaiming the control of the trend. So that means we're going to see a move up, a significant move up. At that point, that is what we call support. Okay, which we can also be called a demand level, a demand zone, because it's at that point we start seeing more demand. So this is what we call a support. Price is coming down, and then at a point, it just makes a significant move up. That is a support. Okay, it's very simple. And a resistance is when you have the an initial overwhelming buying pressure, right? So at some point, you now see sellers taking control. As the brand price gets here, the sellers are now taking back the control of the market. That point is where we call a supply zone or a resistance zone or a resistance level. So that's a resistance there. Okay, it's just very simple. If you understand that, please let me know. If you know you understand this support and resistance, what it means, let me know. So price is going up overwhelmingly, and then it just makes significant move downward. That is resistance. Price is going downward, selling pressure, and it just make a big bounce. Support. Simple. All right. So I'm going to tell us, I'm going to tell you guys later what we use this thing for, what we use this concept for. And there is a particular strategy we're going to talk about when we get to the intermediate class. I love it very well. Okay, two strategies actually that are actually bound around this support and resistance. I'm also going to teach us how we can get better support and resistance level, stronger support and resistance levels that we can use for it. Okay. Okay, so let's look at the chart and see if we can get some support resistance. Let's maybe go to the 4-hour time frame. So what level is this? Here, price was coming down, just bounced up. What can we call here? Does anyone know? Please type it. Price was coming down and just bounced up. What is that? Okay. I have to people say support. Good. That's support. Okay. Or here. Even here, when price was coming down, right? Just bounced up. That's support too, right? What about here? Price was going up. It just turned down again. What do we call this level? Okay, I want responses from us. What do we call that level? That was going up, just turn back as resistance. Yeah, as resistance. Okay, very simple stuff. That's resistance. Okay. We'll look at another example. Maybe USD/CHF 4-hour time frame. What's happening here? What's happening here? Let me pick just here. What's happening here? What do we call this? Price moved up and then just turn back. That's resistance. Okay, very clear, resistance. So you can now mark it. That's what we use this horizontal line for. You can mark your resistance. You can change the color. I can say, okay, I want my resistance to be green. And I want it to be thick so that I can be able to see it. I can say this is my resistance. All right. I can say this is my resistance. There. I can say this is my support. All right. Price was coming down and then pushed up. Okay. Now, there are some guidelines concerning support and resistance. That's what I want to look at now. Some guidelines supporting support and resistance. So let's look at them. So number one is when a support is broken, it turns to a resistance level. That's the first thing. All right. The second thing is that when a resistance or support is broken more than 2 consecutive times, it's not a key one anymore. It's not a key level anymore. So we can just discard it. So when the price just broke so when the resistance or support level is broken more than 2 consecutive times, it's not a key level anymore. Okay. So that's the second thing we need to know. So third thing we need to know is that when you have 2 or more resistance or support very close, then we can merge them into a zone, into a support or resistance zone. All right. That's another thing we need to know. Those are kind of guidelines for support and resistance. Okay, so let's indicate that. Let's indicate all this. So let's say price was going up. Okay, let me use one line. Price was going up. And when it got here, it turned down. When it turned down, we established this as a resistance. Let's say later on, price now broke this level. When it broke this level, the next time price is coming back to that level, it's no longer a resistance level. We can't call it resistance level anymore, right? We now call it a support. So that's what we mean. That when the resistance is broken, it turns to support. So that means price could come back here now and bounce. That's what it means. So when the resistance is broken, it turns support. The same thing when you have price, oh, sorry. I've actually cleaned that. The same thing when price is making a move downwards like this. It created this a resistance, sorry, support initially. Support, yeah. And then price now break below here. So next time it's coming back to that level, it's retracing to the level. It is now a what? A resistance. That's what we're saying. When the support is broken, it turns to a resistance level. All right. So the second guideline is when you have a level broken consecutively, like consecutively, more than 2 times. Oh, cool. Well, thank God we got this back. So let me clean this. So let's say we have a resistance level here established already. So price was going up and then it turned down to give us the resistance level. Okay, let's say this was the price. It was going up and then it came here, it just turned down. So price was going up. When it got here, it started falling. That's resistance, right? Now, price is permitted to still have this place, to still consider this place a respectable place. We don't expect the price to just be breaking it anyhow, because if we're breaking it anyhow, that means it's not that very much respected by the price. All right. So if the price breaks this resistance level, it turns support. So that means the next time price comes there, we're expecting it to bounce and go up. But if it doesn't and it breaks through again, that's two consecutive break. Consecutive. This is the first one. And then price just came back and broke it again. Now, the next time we have a retest, this place becomes a resistance. Resistance broke, becomes support, broke again, becomes resistance again. And so we can then look for a rejection here and price goes down. But instead of that, if what happens next is price now quickly break back up to give us a 3 consecutive break. 1, 2, 3. So what we're saying there is that we can consider, we won't really consider that level a key level anymore. Okay, we're not going to consider that level a key level anymore. Okay, so I have Chimezili says my battery is almost down. Hope I can leave. Yes, you can leave. You can download the video on YouTube. So 1, 2, 3 consecutive break. Then I'll just remove this. Okay, I'm just going to remove it. So which means that it's not really a key level anymore. We can remove it from our chart. Okay, so now the fourth one is this. So let's say okay, let me do something else. So I want to use support this time around. So let's say price was coming down and it came here, formed the support and then move up. So this is a support, okay, established. You have to see that it's, the level is established first. Okay. So that's the support established there. The support. So the first time price now comes here, let's say it breaks through, this support will now turn to a resistance. So which now means if price comes back here later, we're going to expect a rejection and then price can continue to go downwards. But if instead of respecting this, because the first time it didn't respect it, if the second time it breaks it again, it's still cool, then we can expect a move down here to the level to retest and then go up. So we can consider this a kind of fake break. But if that's not the case, and price kind of now, let's say it goes up and then now comes down to break it again, 3 consecutive times, 1, 2, 3, then we can regard this as not a key level anymore. Okay, we can disregard it rather as not a key level anymore. Okay, so that's what the second guideline is saying. Now the third guideline is such that, let's say you have price move this way. Let me clean off. So let's say you have price moves this way. It's coming down, a bearish move comes here, it bounces up. Next time comes here again, then it bounces up. The next one comes here again, it bounces up. Now, you're going to discover that we have three support level here. This is support, price came down, bounce up. The other support, price came down, bounce up. The other support, price came down, bounce up. So we're going to discover that these three levels are very, very close. You have this one here. You have this one here. You have this one here. Three very close levels there. 1, 2, 3. It could be 2, it could be 3. Once it's more than 1, you have 2 or more resistance or support very close. Then this becomes a zone. So that means if that happens, I'm now going to mark this place as a zone. All right, I'm going to mark it as a zone. That's what I'm going to do there. So because the question is, when price comes back to that level, which of them is going to respond? Is it here or here or here? I don't need to choose anyone. I can just choose the 3. That this is the zone. This is the support zone. Okay. So this is the support zone. So price breaks through, then it becomes a resistance zone. As the price breaks through, it becomes a resistance zone. So all the other guidelines apply. So if the price now breaks it like 3 consecutive times, then it's with disregard the zone. All right. So that is it about support and resistance. Okay. And so what are support and resistance used for? Now, support and resistance are really, really very key places where we can say that the market makes some important decision, and the market has a memory. If the price of Euro USD was going up, and at some point it start coming down, something happened there, all right, to change the market flow from a bullish one to a bearish one. So it's very important that you note that level, because next time price comes there, it's actually price is more predictable around there, okay, than any other place. Because here it's either you see a breakthrough or a rejection or a fake breakout. All right, those are the things you could see there. A breakout, a rejection of the level, or a breakout, or a fake breakout, like a minor breakout and the price quickly rush back inside. So, and these are trading strategies that we can use around the support and resistance level. So we have the fake breakout strategy, which I like using very well. So what I do there is I try to establish 2 levels 2 times when the price bounced like this in a bullish move, for example. And so I note where the move is starting from, which is here. So I'm going to explain to us about the strategy more in the intermediate class. Price moves up, creates these 2 tops, which means that this level is really, really very strong. I can mark them together, just like I said that time. You're going to mark it like a zone. So when price gets back there the next time, I'm going to look at, I don't really trade rejection. So I trade 2 patterns around this support and resistance. The first one is a fake breakout. The price breaks out and quickly comes back inside to break below here. I'll wait for a retracement back here and look for trade opportunity. So I use some other stuff, some candlestick formation, which we're still going to talk about. If I see that candlestick formation here, and I'll sell, and then my target is going to be around here. Now, usually, this kind of setup is about 1 to 6 risk reward for me or more, and I do it on the 4-hour time frame. Okay, I do it on the 4-hour time frame. So that's one way of trading around trading around support resistance. Okay. Another way, I'm going to show some examples, maybe one or two examples on the chart. Another way is to wait for a breakout to happen. Okay. Is to wait for a proper breakout to happen. So price makes a breakout. Now, breakouts are different from pullback, breakout are different from fake breakouts. So when you have a fake breakout, price breaks out and quickly push back inside. That's a fake move. That means it's not really ready to break out. When you say breakout, it breaks out properly and goes away. Then after a while, you see it come back. So I wait for a comeback to that same zone. And then I look for those candlestick pattern again. And then look for a buy. And then I now use my Fibonacci from here to here. I'm gonna talk about Fibonacci in the intermediate class. And then my target is gonna be around 61.8 Fibonacci projection of this move from here. And my stop loss is gonna be here. So this allows me to enter with small stop loss and a big tick profit. This one is usually like at least 1.4 to 5 risk reward. So the concept I'm just to tell you that everything we talk about is a foundation. Everything we talk about now in the beginners class, this foundation class, is going to be a foundation of what we're going to talk later when we get to the other classes. Okay. So like the IRI and all those things I told you guys about, we're going to make use of it a lot when we get to, because there's still another strategy I'm going to teach us in the master trading class. So make sure you get yourself available for each of these classes. All right. Talk to your Growth Exchange account manager, and then they're going to tell you the criteria, what you need to do to join me in those classes. Okay, so let's see if we can get some examples on the chart. So I'm going to take us to Trading View, which is where I do most of my analysis. So a moment, please. All right, so let me take you guys to my Trading View. Okay, so if you can see it, let me know, please. Can you see it? So on this strategy, I like using it from the 4-hour time frame. Yes, I have to say that it won't give you so many trades, especially if you are trading from the higher time frame. Okay, I don't really like having too many trades personally. I don't really like it having too many trades. So this strategy, if you trade it on the 4-hour time frame, might give you like maybe 6, 7, 8 trades in a month, but they are quality trade. All right. So let's see. So I'm going to just cut off that place so that we'll see what I'm talking about. Now, like I said, the first thing I'm going to notice a move coming down. This move here. And then I'm not going to identify levels where we have support. Now here, price came here, bounce, came here, bounce, came here, bounce. Before we now see a break, and then price quickly push back. That's a fake breakout there. So I can then say that this place is a very, very key support zone. Now price broke below it and quickly pushed back. So that's a fake breakout. Okay. And when it break, I will also be patient. So it's all about being patient for price to pull back inside this place. They put back inside it, whether a little bit inside it or deep inside it. So once I see the first big bullish candle, and I have all those different candlestick pattern I use. I'm going to talk more about that. But for those of you who have attended the classes before, you already know what I'm talking about, right? So it's at this I'm not going to get into an entry. All right. So let's say I pick an entry here, a long entry here. My stop loss is going to be just below here. And then my target is going to be the starting point of this whole move here. Can you see this move here? That's the starting point. This is about 8.35 risk reward. Okay, which means that if I risk $100 on this trade, I'll be anticipating $800. Okay, and sometimes I also get if the move is if it's too much, I usually look at 6.5 to 7 risk reward. Sometimes I don't go for all the targets. Okay, like this one, I just maintain kind of just make it around that 4.5 or 5 or thereabout. And so price really moved very much up. In fact, I think it got to the final target eventually. I don't know that supposed target, but just that before it got there, it will have spent so much time. Okay, didn't really get to this spot here, but I will have picked very mighty profit around there. Okay, so that's one example there for us. Another example of that of a fake breakout is the most recent one I did on Aussie Japanese, and that one is very massive. All right. And so what I got here was price moving up. And then I got some support here. Support here. And what happened? Price broke above the support. Let me extend the support. So price broke above the support, which is a fake breakout, comes back inside and goes to retest it. See that? And so I was able to get an entry there as well. So that was a sell entry after that candles thereabout. Oops. So that was much better, about 7 or so risk reward, but actually will have given more. And then for this one also, I'm not going to target the whole profit, okay? Because if I want to do that, it's going to be around here, and it's going to take so much, and the price might not even get there. So I have to be very reasonable. So that's why I always look at under 6.5 to 8 risk reward, which is very massive, very massive. All right, in any way you want to look at it. Okay, there's another example. GBP New Zealand, this is one currently ongoing. New Zealand. Okay, is it this New Zealand? GBP New Zealand, is it it? I don't know. I don't think so. Okay, let's just stop there. Okay, let's look at another example. Our time is going. Another example, the breakout pullback continuation, like the one I did on Aussie yen. That was was it March? Is it March? No, March or so. Let's look for it. It was a bullish trade. Then it was on the 1 hour time frame also. Okay, let's look at the 2 hour time frame. Okay, I think it's right here. Right here. So price started a move here. Oops, I want to remove. Price started a move, moving up. Resistance. Give us a series of resistance around here. Right? And eventually it broke it. So I'll just capture all these things. Eventually it broke it. And then after breaking it like this, it makes a correction. Now, this is not a fake breaker, because if it's going to be a fake breaker, it will rush back inside. But what happened? It makes a rebound here, pushed up, and then I get in. You can see how it continued to go up. There were so many other examples, especially for these ENPS that month. A whole lot of them. Okay, so that just let's not spend too much time on that, because our time is already fast spent. Okay, so that's it for tonight, guys. We're going to talk more about this. Remember, everything we are doing now is a foundation. We're trying to lay a foundation for what we want to look at later when we get to the advanced, intermediate, and the master class. So we have the foundation class, we have the intermediate, and we have the master class. Just created the master class, and it's filled with a whole lot of massive curriculum that will transform you to a complete confident trader. Okay, so that's it for tonight. Thank you very much. Now let me have your questions. If you have any question, please drop it now. Okay, so we're going to take question maybe in the next 5-6 minutes, and then we're going to call it a day. So we're going to meet again tomorrow. Please check this video on YouTube later. Thank you very much.